Hello everyone, good morning. In the late 1980s, Japan's stock and property boom didn't just create wealth, it wrote the rules of society until the rules snapped back. Yes, I'm talking about the bubble that happened in Japan in the late 1980s. Japan experienced one of the worst, or let's say one of the history's wildest asset bubbles. Property and stock prices soared, fortunes multiplied overnight, and a new class of, the new breed of rich, as we say, emerged. I mean, this was purely based out of resentment that Japanese people had among themselves. They flaunted luxury, credit cards, and expensive lifestyles were emerged, shattering Japan's traditional work ethic. So, what used to happen was Japan used to be pretty disciplined towards their work, but when it happened in the late 1980s, the bubble started building up. They started flaunting luxury, credit cards, the lifestyles, expensive lifestyles, but behind the glamour was, as always, the resentment that the Japanese people had towards each other. The wealth gap exploded, older generations saw values eroding, and the social balance between, the rich and the poor kept widening up, and that led to a collapse of the financial system of the Japanese market, like the South Sea bubble or the Gilded Age that we saw in the US. Speculation was no longer just an economic risk, it was a pure cultural threat as far as Japanese economy was concerned. Authorities eventually pricked the bubble not only to save the economy but also to restore the discipline. As investors, now what we can learn from this lesson, the lesson is pretty clear. Easy money can create false confidence, it can break discipline, it can just blur the line between the risk, the skill and the luck. So when valuations detach from reality, the fall can be, swift, and markets don't care about your lifestyle, it's just the numbers. And if we can relate with Indian stock market, the way Indian market behaved on Friday was something that we need to think about. Market is going to punish all those stocks which are not able to grow. You saw PG Electroplast, you saw Kalyan Jewelers. I mean, the reported numbers were quite downgraded, and the market was anticipating something, but the results were shown something different. So market is going to punish all those, so you have to be careful in this market. You have to look out for all those companies which are growing, and if it doesn't grow, then you are going to get ripped off from the market. Thank you.